Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Tuesday the 6th of June 2017, and if it's okay with you, I'm going to provide you with a little bit of education today on how you can understand the fabled stop hunt and get a better grasp of it and hopefully be able to take advantage of it in the future. We've got quite a lot of big risk events coming up this week with the UK general election and the ECB, so I figured I saw this on a chart and I wanted to do this for you to help you understand what stop hunts are and how you can see them and hopefully trade them. The first thing to say though is that stop hunts aren't some sort of nefarious evil entity. It's not a conspiracy or anything like that. It's just unfortunately a necessary evil in terms of big institutions have a huge problem in as far as their power is also then their size is also a curse, because sometimes when they're taking trades and they've got huge orders to fill, perhaps on behalf of a client, they may have problems with liquidity in a scenario like that. Depends obviously what they're buying and selling. So the issue is there's not going to be enough people on the other side of the trade to allow that transaction to complete. Beyond that as well is they can't just put that huge enormous order into the market in one go without it actually moving the market. So what they've got to do is they've got to find a location where they want to do business, and then they've got to manipulate price in and around that location to work the area so that they can first of all hide their movements, because obviously they don't want everyone to know what they're doing, because that would be bad for business, and it sort of defeats the purpose as well if they're trying to obviously transact without moving the market. This is a version of a stop on level. It's fairly complex. It's not the most complex I've seen in my life by any stretch. It can get a lot more complex than this, but because they're taking such huge positions, and sometimes those positions are a lot bigger than the average volume that they deal with, they'll move markets, they'll get hammered with slippage, so they've got to hide their movements, and that's quite easy in as far as the vast majority of traders think very one-dimensionally about price action and patterns, whereas they're not relying on you to think more laterally in the stop hunt. And this particular type of relatively complex stop hunt is ideal for them, because you won't see it coming and you'll get manipulated in and around that area, and very often get stopped out because your behavior is very typical and it's very obvious, and they're obviously preying on the fact that you won't see what they're up to at these levels, and unfortunately you become collateral damage to the fact that they needed your order to transact efficiently. And that's ultimately what they're trying to do. They're trying to efficiently transact at good prices, but everybody's trying to do the same thing. And what I mean by that is, if you've got a well-defined level of resistance, there's a very large amount of traders who are also trying to transact off those levels. Now, if everyone's selling at the same point, then obviously that creates a problem for an institution if they've got a huge order, because there's not going to be enough people wanting to take the other side of the trade. Everyone's going to want to sell, right? So how do they get around that? Well, a well-defined level essentially telegraphs the trader's behavior. So for instance, if you've got a level that's been touched 3 or 4 times in this case, if you go short of this level, there's a very high likelihood that you're going to place your stop in and around that area. So if we were to have a look at the orders behind the scenes, what you would find is a density of orders in and around the level. The orders would cluster like so. Okay, be very dense there, and then they would get more sporadic the further out you went, because people like to use tight stops. Obviously all the training educators etc want you to be tight to these levels to manage risk etc. So it's just a human behavior that's just a fact that these orders cluster around these very obvious swing points. Now the other part to this is that we're told in the retail space that the more level of support and resistance touched, and there are different types of stop hunts. There was obviously stop hunts in trends, and it's beyond the scope of this session, but at a level we're told that the more levels touch, the stronger it gets. So what that does is, because we're not thinking laterally, what that does is that creates a scenario where we get really focused in on the price action at the hard rate edge. So this is the hard rate edge. This is the hard rate edge now, right? This is what this is. This is where the price is playing out and printing, and we don't know what's coming into the future. So if we were to draw a line there, we don't know what's coming. But the thing is, the hard rate edge is going to fill with price. It just requires a little bit of time. But what happens is that the chart itself actually acts as a bit of an optical illusion. So what happens is that, just think about the process of taking a trade normally. Like, just, you'll know this to be true if you have that introspection and just think about how you've taken trades yourself in the past. What tends to happen is you're focusing on these historical patterns, and it doesn't matter what they are. In this case it's resistance. You focus on the historical pattern first and foremost, and once you recognize a pattern recognition comes from those structures being very obvious. And as these structures start to build, so obviously when you have a turning point, a pivot like that in price, you know, it's nothing at that point until it comes back, and then it sort of solidifies itself as a level of resistance. And at that point you might start thinking, oh right, I'm gonna look at this level, and if it comes back into this level, I'm gonna go short in here, because this is obviously, you know, a solid level of resistance, and people, you know, whoever sold there made money, whoever sold there made money, whoever sold there made money. I know that the more levels touch, the stronger it gets, so I'm gonna sell there too and hopefully make money. Now the caveat to that is that what we tend to want to see is some type of reaction off a level. I refer to this as entry cheese, in order for us to pull the trigger and take the trade. So people do place orders, just not that many in number, because people get a little bit sick of being crushed when you just place an order at a level and it just flies straight through the level. And it's at that point that you'll take some risk and short and enter the market at a level. Now what you'll notice as well about levels, if you've watched them for any length of time, is that very rarely do they never breach, and that's part of the stop hunting process, because if everybody's buying and selling off a level, their behavior where they will place their stops, as I've just mentioned, becomes very obvious. And if you are to sell off a level of resistance and you place your stop above these swings, what is occurring there is that clustering of orders above the level is actually buy orders sitting there. Okay, so if you sell in there, your stop loss equals a buy order that's just sitting above that level. Now then, if you just think about this process, an institution wants to buy low and sell high, just like everybody else, right? Mostly, if you discount breakout traders and momentum traders, most people are trying to do that, right? Make money buying and selling in this game, the same way you buy and sell and make money in anything in life. You're trying to buy at wholesale, sell at retail, or trade prices and then sell at retail. But as I mentioned, the problem is if everyone's trading off a well-developed level of resistance and everyone's trying to sell, and you've got a huge sell order that you need to get done if you're that big institution, then how the hell are you going to do it? Well, wouldn't it be handy if you knew that others were selling, but also they were placing their stop losses above these structures when they're well defined like this, and that equals buy contracts. Now if you need to do a ton of selling, if you're this big institution, you've got this huge order you need to fill, then wouldn't it be wonderful if you knew where there was a lot of buy orders sitting so that you can sell in the face of buying? So an institution, as price goes up like that, they will start selling in the face of buying. Right? They'll start selling into it, and especially if those are stop loss orders. They'll also most likely be involved in these moves as well, and manipulating the level to create the illusion. It's very probable that that's going on as well, but without sort of making it too complex, we'll continue on with the narrative that if you were a big institution and you knew there was buy orders sat above that level, wouldn't it be wonderful if you could push price up through that level and fire some of those buy orders off so that you can get some of that business done? Now, I said I wasn't going to get too complex. I'm about to add a degree of complexity to this. Look at this as well. So part of understanding order flow, stop hunts, trading traps that occur at these locations is all about placing yourself in the shoes of the individuals who are taking trades, be it at levels of support, breakouts, retracements, etc. And if you think about traders who sold off this level and price is down in here, yeah, imagine a retracement trader saw that. The retracement trader wouldn't sell there, the level trader would sell there, but the retracement trader would sell at a pullback if it's a little bit of a level, right? Support becomes resistance is the idea. So people would go short in there when they saw that entry cheese, that confirming price action. They place stop losses above there. Now what are those stop losses? Well, if you sell, those are buy orders. And what about this? It comes up. So, you know, not everybody's going to sell a shallow retracement. A lot more traders, retracement traders, are interested, right? These are retracement traders, RT, are interested in the golden ratio, right? There's the 61.8%. Look at the price action. Very convincing. Entry cheese. So they go short, believing this is going to follow through. It puts in a new low. They think this is going to, you know, head down and make a lower low. It gives them the impression that it's working. They go short. Where's the stop loss? Above the swing. So that stop loss is, you guessed it, more buying. So as price gets manipulated up through those stops, obviously more buying equals more selling can be done. Are you with me? So this is averaging essentially the entry price of an institution, potentially working all of these little areas where they'll take some selling in there, they'll do a bit of selling in there, they'll do some selling in there, some selling in there. You see what I'm saying? And as price breaks up through that level, some selling in there. So their average price is scattered throughout this structure, which means their distance to profit is very much reduced. Just bear that in mind. Now then, getting back to this scenario. So I did complicate it slightly, so apologies for that. But getting back to the level. So we've got stops, we've agreed we've got stops above that level. As price goes up through the level, we've also agreed that that's going to trigger those stops and it's going to allow something big, right, an institution, to sell in the face of that buying. Now get this. What happens when price breaks up through a level that's been well defined 2 or 3 times, right? 3, 4, 5 times. What type of trader enters the market as price breaks up through a well defined level of resistance, as in this example? The answer is breakout traders, right? Breakout traders will go long, momentum traders, believing that that's a strong breakout. So what they do, interestingly, is not only are those stops being triggered, which I refer to as forced buying, right? Because those sellers who went short in here, you know, they didn't want to be stopped out. So the fact that those buy orders are being triggered is not a happy moment for those traders, right? That's forced buying. But get this, the breakout traders going long as price goes up through the level, that's not forced, right? It's forcing as far as the price action is forcing them to take an action, but it's willing buying. It's a different type of buying. Breakout momentum traders are going long in here, hoping that this will follow through. What does that equal? You guessed it. More buying. So the institution can get off more of its sell orders, right? Now here's the next step to this. If you think about, you know, we've encompassed the stop hunt, we've encompassed the breakout trader, but guess what happens when price breaks up through a level and then pulls back into prior resistance? Right. The idea then is that this level becomes support. So who's going to go along in there? Who did some buying? Retracement traders, RT, right? Retracement traders go long. Well, isn't that handy for the institution as well? Because it's more buying, it's willing buying, right? It's people who would think this is a break pullback. It's a great trading opportunity to take a trade and go long, right? That's what traders do. That type of trader. So price breaks up through the level, pulls back, starts to look like it's heading up, and does head up, and those traders go long, placing their stop losses, which is obviously sell orders. We'll get to that in just a minute. More buying, so the institution gets to do what in the face of that buying? You guessed it. More selling. It comes back to the level. Again, would have looked like it was going up again, gives those traders who maybe missed that original move another opportunity to go in. They'll place the stops below there, more selling, and this time as price breaks down through that level, those sell orders are going to help that momentum, and then you've had something big, essentially. You know, just think of it in a singular term. Obviously, you know, there can be many institutions, you know, doing things like this, but just think of it as one institution. It's just easy to get your head around. You know, that big entity did a huge amount of selling in the face of all that buying, and people were buying for different reasons. People were being stopped out, people were entering willingly, breakout traders were coming in, retracement traders were coming in. All of that allows the institution to do business and get all of their sell orders done, and then price then collapses. And this is why so many levels you'll witness that are well defined. It's got to be well defined. It's got to be obvious, because otherwise no one's going to trade them. If no one trades them, then you're not going to get these build up of liquidity above the level. But so many levels do that, and obviously that's an oversimplification, that it just goes up and down through the level. That is a stop hunt. It's one of the most simple versions. This is obviously a little bit more complex, as we've been describing. Hopefully you can see that it is fairly complex, but it's not by any means as complex as they can be, and you can learn to see this stuff in real time. It's not a you know, you just can because it's each step of the way you can logically walk through the steps of the order flow, and then realize once the level's been nailed essentially and all of that liquidity's been taken, now you should be off to the races. And if you've hopefully you found that helpful, and obviously, you know, if you're selling that scenario, you know that you're selling with something very large that's done some business, so it's increasing the chances of you having obviously a profitable outcome. But if you'd like to learn more about this very valuable trading information, come and join me in my brand new inner circle. I'll teach you all the complexities and all the different types of scenarios that exist with this type of trading and understanding of order flow. Click the link below. I'd love to see you there. Take care.